A very good morning to all participants, to our distinguished panelists and speakers. Thank you so much for joining us. My name is TJ, and I will be the moderator for this webinar session. You know, we have more than 500 participants registered for today's session. So we are looking forward to really just hearing from our speakers, the thoughts they have on this topic of achieving financial inclusion through the cloud. Over the course of the past year, the Asian Development Bank, the Economic Research Institute for ASEAN and East Asia, and Amazon Web Services have been hosting a series of policy webinars around digital policy and digital transformation with the cloud. This is a multi-stakeholder dialogue bringing together policymakers, regulators, think tanks, academia, industry, and other key stakeholders to explore how the cloud and forward-thinking, pro-innovation digital policies can accelerate the digital transformation journey of nations. In this session, we will deep dive into the relationship between financial inclusion and the cloud. You would have seen a simple housekeeping slide. So allow me to just share again, that through the course of this webinar, should you have any questions for the panelists, please send them via the Q&A function. And now, it gives me great pleasure to invite Ms. Lisette Cipriano, the Senior Digital Technology Specialist, Financial Technology Services of the Financial Sector's Office from the Asian Development Bank, to share some words with us. Lisette, please.
Thank you so much, TJ. Ladies and gentlemen, distinguished guests and esteemed panelists, a warm welcome to this webinar on achieving financial inclusion through the cloud. I'd like to thank Jason Bogovich from the Southeast Asia Development Solutions Knowledge and Innovation Platform, what we call SEADS team. Rashesh Shrestha and TJ, of course, from the Economic Research Institute for ASEAN and East Asia, and Mani Pular from Amazon Web Services for inviting me. The theme of today's webinar underscores the vital role that cloud technology can play in advancing financial inclusion, making it a timely and relevant subject for discussion. We will be hearing from practitioners and experts today who have acquired much insight and learning, sharing their experience and observations on how we can all collaborate to harness the potential of cloud technology to extend financial services to the unbanked and underbanked populations, ultimately fostering inclusive economic growth and development. Financial institutions as key drivers of innovation have a significant role to play in embracing cloud technology. By migrating their core banking systems to the cloud, for example, these institutions can experience operational efficiency, technical flexibility, and expand their reach and provide digital banking services to previously inaccessible regions. The scalability, cost efficiency, and flexibility of cloud-based solutions enable financial institutions to offer innovative products and solutions tailored to the needs of diverse customer segments. Regulators also play a crucial role in cloud adaptation within the financial services sector. Striking the right balance between encouraging innovation and safeguarding customer protection is a challenge that regulators face. The panelists will later discuss how progressive regulatory frameworks can facilitate cloud adoption and an enabling environment for financial inclusion through cloud technology while ensuring data security, privacy, and compliance with relevant laws. The cloud offers great advantages in terms of cost efficiency, scalability, and accessibility for organizations, as I said earlier. By leveraging cloud-based services, financial institutions can lower infrastructure costs, freeing up resources that can be redirected to expanding customer services, focus on business development initiatives, and developing new innovative products and services. The flexibility of cloud computing allows financial institutions to have real-time access to data, scale operations quickly, and enable organizations to accommodate changing customer demands and market dynamics. Despite the myriad benefits of cloud technology, its widespread adoption in the finance sector also presents certain challenges. Data privacy, security, and compliance are critical considerations that must be carefully addressed. In light of these challenges, the Asian Development Bank stands as a crucial partner in supporting financial regulators. Through its Cloud Audit Toolkit for financial regulators and other initiatives, the ADB provides guidance and resources to help navigate the complexities of cloud technology while ensuring security, data protection, and regulatory compliance. As part of the Philippine Inclusive Finance Development Program, one exemplary case of the ADB support for cloud migration is Cantilan Bank's core banking system project. Through a collaborative effort, Cantilan Bank was the first bank in the Philippines to migrate its core banking system to the cloud, expanding access to financial services in underserved communities. The support of the Bangko Sentral ng Pilipinas, or BSP, in this endeavor, this paved the way for Cantilan Bank's participation in its regulatory sandbox. The sandbox was instrumental in identifying the necessary amendments to IT outsourcing regulations in the Philippines. This successful pilot projects showcases how a supportive regulatory environment can drive financial inclusion through cloud technology. Since then, Cantilan Bank has gone on to develop their API layer, enabling them to plug on new services, such as their mobile banking app. And today, there are now over 40 banks in the Philippines who have approval to also migrate their core banking system to the cloud. Furthermore, we cannot overlook the impact of cloud technology on climate resilience. As we strive to address the pressing challenges posed by climate change, cloud technology presents opportunities to foster sustainable practices. During Super Typhoon Rai in December 2021, Cantilan Bank was the only bank in the region who was able to immediately service people in the wake of the devastation due to their ability to operate from the cloud, enabling them to restore their banking services a day after the storm struck. Today's webinar really holds immense promise for exploring how cloud technology can revolutionize financial inclusion and build a more inclusive and sustainable future. I extend again my sincerest gratitude to our esteemed panelists for sharing their expertise, and I'm eager to hear their valuable insights on this critical topic. Let's collectively embark on this journey to harness the potential of cloud technology to achieve financial inclusion and contribute to a more resilient and prosperous world. Our heartfelt thanks to our distinguished panelists, Jamie Kaw from Grab, Leroy Pinto from Ringkas, and Rashesh Shestra, and TJ, of course, from Maria, for joining us and sharing their valuable insights. Thank you all for your participation, and I wish you an engaging and insightful session ahead. Over to you, TJ.
Thank you so much, Lizette, for setting the scene for us. Without further ado, let me just quickly introduce our panelists for this morning so that then we can go straight into our conversation. Firstly, it gives me great pleasure to introduce Ms. Jamie Kaw. She's the Director, Regional Public Affairs and Policy at Grab. So Jamie heads Grab's Regional Public Affairs team, which looks into public policy topics relating to technology and its impact in the region. She and the Grab Public Affairs team build partnerships with governments to support national policies, engage with governments and other stakeholders on policy discussions, and drive initiatives to harness the potential of technology to create impact. Thank you for joining us this morning, Jamie. And our next panelist is Mr. Rashesh Shreshtha, economist in ERIA, the Economic Research Institute for ASEAN and East Asia. His research interest lies in labor markets, economic development, and human capital investment. At ERIA, he conducts academic research and leads policy-oriented research projects on a wide range of themes, including human capital, education, global value chains, trade facilitation, regulatory management systems, and financial inclusion. Prior to joining ERIA, he was an associate lecturer at the Australian National University. So thank you so much, Rashesh, for joining us this morning as well. And Our third panelist for this morning, Mr. Leroy Pinto, founder of Ringkas, based in Indonesia. He has 18 years of experience in tech, go-to-market strategy, and new ventures. Leroy has worked as an executive in the US and across the APAC region in companies such as Amazon, Google, CT Corp, Verisym Software, Workbrain, and Accenture as a consultant. He is now the founder, building an early-stage startup named Ringkas, focusing on providing impact to democratizing mortgage financing in Indonesia. Thank you, Leroy, for joining us. So I've introduced our three panelists for this morning. I want to jump straight into the conversation that we have prepared for you. Let me just first throw this first question out to all our panelists. Perhaps Jamie first. Can you share some thoughts as to how innovative technologies are changing the face of financial services across Southeast Asia? And what are the trends you're seeing in this particular space? Over to you, Jamie.
Thanks a lot, TJ. Maybe I think I would like to share about two broad trends. Firstly, I think we're seeing the trend of increasing demand and creation of very diverse financial service modalities. So in Southeast Asia, I think we talked about continuing to see previously underserved communities, for example, small businesses, individuals from marginalized communities, accessing financial services through more diverse channels, especially digital ones. The shift began with mobile banking and people, using their phones, but it won't end there. The pandemic has actually accelerated adoption of digital financial services across the region. In fact, based on Grab's data, millions of people use cashless payments for the first time on the Grab platform during the COVID period. And if we look at it, more than 90% of the region's 400 plus million internet users actually go online via mobile phones. So there's a lot of potential that we're seeing in this area. The region's governments are also seeing potential in offering financial services digitally, which is why a number of them have awarded licenses for digital banks, which offer banking services entirely online without any physical presence. So one innovative solution that has arisen from this increasing digitalization is fractionalized financial services. So many traditional financial products and services tend to be inaccessible to those underserved because they're only able to pay small amounts because they don't have a lot of cash on hand. So in Southeast Asia, we see FMCG companies, consumer-facing firms selling consumer products in small sizes like small sachets or bottles. So basically, this is the same concept that can be applied to financial products, and digital financial services can be fractionalized for the underserved. So let me share some examples of these kind of offerings that we have at Grab to give you a sense of this trend. So at Grab, we provide fractionalized financial products and make them more micro so that they are accessible to these underbanked. They include small business loans for small businesses, daily ride-hailing insurance, and critical illness insurance in a bite-sized pay-as-you-earn type of model for driver partners, and also financing to help our driver partners purchase mobile phones, smartphones to take up work on the platform. So how this works is that instead of having to rely on things like credit history, pay slips, salary history, which is challenging for the financially underserved to provide, Grab is able to leverage data from transactions with these partners to assess creditworthiness in a different way from traditional financial institutions. Then the fractionalized insurance solutions we provide also allow our partners to pay for the premiums in line with their earning patterns. When they have a job, when they take up a job, then they contribute a little bit. When they go online, then they subscribe to the e-hailing insurance on that day, instead of the larger upfront type of payment premiums that happen in the traditional products. So that's the first trend. You see this innovation on new products coming up increasingly. I think secondly, I think what we notice is also that financial services will remain a people-centered business. There's a lot of talk about digital, a lot of talk about technology. While financial services will continue to get better with more efficient and accessible products over time through technology, what will truly set companies apart are those who are able to engage with their users well, build a community their users want to be part of, where they believe their needs are well understood and supported. So at Grab, for example, our communities of consumers, driver partners, merchant partners, they're centered around the mobility and deliveries core services we provide, either to meet their commute or food consumption needs through these everyday services, or for partners to access livelihood opportunities. We're continuing to invest in supporting these needs, and the financial services businesses we have are a key enabling role to support them to succeed in these areas. So besides giving them a range of options to access financial services, to be able to meet these needs, we also recognize the importance of ensuring they are well equipped to use the financial services in the right ways. So those are the two broad trends I'd like to share.
Thank you very much, Jamie. I like what you shared about fractionalized financial products. Let me move on to Leroy. The same question. Please do share with us your thoughts in terms of what you are seeing in this space.
Sure. Yeah. Thank you. So much, DJ and ADB for having me. Just to share some quick thoughts. I thought, a few of the thoughts that Jamie shared actually resonated as well. I think something like a broad trend that we've seen probably the last 5 years is guys like like Grab, like yourself, Jamie, and that really drove the payments industry across Indonesia specifically. And that led a lot of change. But then, that sort of embedded fintech I've seen a lot of change happen, and that's an area where Ringkas plays as well. But what's been really, I think, very impactful over the last, few years is actually governments have also embraced that. They've seen changes across, say, India, for example, with UPI, and then we've seen Indonesia and governments actually collaborating. So Indonesia implemented the BI, Bank of Indonesia implemented BI fast, and then obviously Ojek also implemented with Curious as well. Where you can actually, integrate different payment mechanisms using a QR code across different payment providers. But what's even more interesting is that governments within Southeast Asia actually, integrated their services. So someone from Indonesia can actually transact with someone and with that same application in, say, Malaysia or, say, Thailand, for example. So that's been one big change. And secondly is, related to more inclusive finance and something that's, quite unique with Ringkas. So Ringkas, basically we help borrowers in Asia get access to financing to buy, their first house. And in Indonesia, the aspiring middle class is still growing, but it's still the majority of the population. And we see, mortgage loans to GDP ratio. Indonesia is less than India. It's at 3%, but GDP per capita is actually more. The mortgage loans to GDP in Indonesia is the lowest in Southeast Asia. But we're seeing, things like a housing backlog of 14 million homes in Indonesia, or households don't have access to housing. And the government launched like 1 million housing program every year. And that's been going on for a few years. And we're seeing, mortgage rates in Indonesia actually decline comparatively compared to the rest of the world. But what we still see is there's millions of people that are still underserved. And they're not getting, access to financing because systems generally favor, say, fixed income employees. There are new homes getting built, but there's problems related to, say, instead of using systems, there are manual people that work with the banks and process loans, process applications. So they can't actually reach majority of the population. Say Indonesia has 1,000 islands. So how do you use people to actually access different islands to give people access to financing to get houses? So with Ringkas, what we've done is we've actually intentionally connected property developers, property agents, where we originate loans. We leverage AI actually to assess customer risk profile and match that with the risk appetite of the bank. And we do this across scale, across Indonesia, so across 36 cities. And we give people that generally didn't have that access to financing, giving them that access to financing. And it helps because of that scale, we can actually reduce the cost of acquisition, reduce the cost of origination, and give more people access to financing. So I think embedded finance is definitely an area that's actually changing a lot of different industries across Indonesia and Southeast Asia.
Thanks so much, Leroy. You brought up a very important topic on access. I think we will talk a little bit more about that later. Rashesh, from the research you've done, the engagement you've undertaken, please do share with us your thoughts as well as the trends that you're seeing.
Yep. Thank you, TJ. I think so. I think the panelists have already mentioned some of the key innovations that are happening. The one thing I'd like to sort of add to that is actually the sort of the increased sort of urgency for digital governance overall in the region, which is basically sort of providing the ecosystem for further development of digital financial services. Of course, I think this is partly, I mean, this kind of digitalization was ongoing even before, but with the pandemic, I think there was a big rush to sort of digitalize a lot of services, including sort of like the e-governance, right? And sort of providing a lot of these government services through the digital platform. And that sort of provides an additional impetus for the consumers or the individuals to be more familiar with interacting digitally with service providers. And that actually does help improve the sort of the ecosystem to make it more amenable for further innovations in the digital financial service. So one quick example, I think, so we have some data from, let's say, the World Bank's Financial Inclusion Survey, which shows a rapid expansion of number of people who have started using digital banking services. And many of them actually started using it during the pandemic. And one of the key impetus for that growth was that when the governments had to sort of provide some financial support during the pandemic, they opted to do it through digital means. So that encouraged a lot of individuals to actually start opening bank accounts, for example, to receive direct payments from the government. And that's sort of the first step in sort of the financial inclusion, digital financial inclusion, right? So people having bank accounts that can then be integrated to other services. We still haven't, so there's still sort of a gap between sort of having a bank account and actually actively using it, which is certainly going to be an important next step. But having the familiarity with the sort of the digital ecosystem, learning how the process works and building trust in those processes by getting experience through the expansion of digital governance, that's going to be an important step, I think. And that's certainly a good sign that we've been seeing, which would further help accelerate the process of digitalization. So, so if, for example, if you look at some data, for example, over 800 million account owners in developing economies open their first financial institution account in order to receive payments from the government, right? So, so that's basically, so the digital governance is going to be a key driver for further expanding the financial sort of digital finance as well, and ensuring that many more people are financially included through the digital means. So I think I'd like to sort of basically highlight that as one of the key developments since the pandemic that would probably propel this industry forward.
Thanks, Rashesh. Yeah, indeed, I think there's really a growing need for more comprehensive and holistic digital governance, not just within particular individual nations, but cross-border as well, right? And you know what better than to have incentives from the government to encourage the people to set up digital banking and to bring forth that whole inclusion through use of technology. Thank you so much all for sharing. We've talked about trends a little bit. Maybe let me just go into then some of the challenges that you see. And for this, I just want to go back to Jamie. From the work that you're doing, what are some of the existing challenges you see in trying to achieve financial inclusion in this region in particular? Jamie, please.
Thank you, TJ. I think while there have been a tremendous progress in making the breadth of financial services available to masses, I think there's definitely areas we can do more. And I'd like to share two challenges. I think the first one is I want to share that there is still some gap in trust in digital financial services versus traditional banks. We know that digital financial services is key to driving financial inclusion for population segments that are currently excluded, as there are limitations on non-digital services reaching these groups today. I think we talked about, a lot of the speakers talked about it today. And based on a study by the Tech for Good Institute about digital financial services for financial inclusion in Southeast Asia, I want to highlight a few key points. While trust is high in both banks and DFS players, digital financial service players, the trust in digital financial services providers is actually slightly lower than trust in banks in all the countries in Southeast Asia 6 that surveyed. The good news is this has been narrowing over time. The study found that integrity and communication are important predictors of trust in digital financial services providers in all countries. Interestingly, the propensity to trust technology, which is one's relationship to and perception of technology in general, does not predict trust in DFS. This means that even if people trust technology, it doesn't naturally lead them to trust digital financial services. So two factors that drive the usage of digital financial services. First, digital literacy. This finding is not very surprising because people need a minimum familiarity with digital technologies in order to access and use digital financial services. Second is financial literacy. It's actually a common predictor of trust in digital financial services providers. Other demographic factors are actually less consistent in predicting trust in DFS. So this means that ensuring people are financially literate is key to building trust in digital financial services, regardless of what demographic backgrounds these consumers come from. So what does this mean in order to enable digital financial services to play a bigger role in financial inclusion? Basically, digital literacy and financial literacy are key. So we need to have initiatives to improve these areas. It's especially important to encourage more confident usage and by extension, financial inclusion, especially among the more marginalized and vulnerable populations. So this is what we try and do at Grab. If we talk about the two areas, firstly on digital literacy, actually as partners come online to take up work on our platform, oftentimes it's the first time they participate in the digital economy, and this gets them comfortable using digital tools. And in terms of financial literacy, Grab has also been collaborating with governments and industry partners to develop financial literacy programs that help our driver and delivery partners. And these programs actually equip them with financial skills and knowledge, such as basic financial planning, budgeting and saving, loans and credit, insurance, as well as investment and retirement planning. So just to give a few examples of this kind of partnerships we do with different kind of organizations. In Singapore, we co-developed a financial literacy program with Ngee Ann Polytechnic, which is a tertiary institute in Singapore for partners to access via the Grab app very easily. And partners who wish to expand their financial literacy knowledge can also choose to participate in an in-person full-day course co-developed with Ngee Ann Polytechnic. And in Thailand, we partner with the Bank of Thailand's Financial Literacy Department to provide 4 online courses on financial planning, debt management, investment, and financial threat awareness. We have a number of these partnerships across the region, Malaysia, Indonesia, with different types of partners as well. And we remain committed to continuing to address this gap in financial literacy through these collaborations. So that's challenge number 1, I would say. I think challenge number 2 we see is that I think the nature of Southeast Asia is fragmented and complex. Southeast Asia countries actually vary very greatly in consumer characteristics, infrastructure readiness, talent availability, and regulatory frameworks. And because of that, financial service providers who have flourished in one country may find it challenging in trying to replicate their success and bringing innovative solutions in the market to another. So extremely important to be able to navigate through these complexities is to ensure that, to look into how there's some areas today where there's no harmonized banking or financial services licensing frameworks across Southeast Asia today. So the implications of that is that most financial services licenses is confined to their one country. So if fintechs want to expand, they must rebuild their network of partners and reapply for licenses multiple times, often with different requirements. So this actually also slows down the process of expansion and also to get innovations across the different markets. So in the light of this environment, companies must tailor their products and approach to the local nuances across consumer segments and markets. So at Grab, we adopt a hyper-local approach and start off by having a whole of Grab Financial Group outlook on the fintech regulatory landscape in Southeast Asia, before we then consider the different nuances in the context of each individual jurisdiction we operate in and the implications to our business and the product we have to build. So being able to enter, operate, and grow in each market requires us to have boots on the ground so that there are local teams empowered by a common tech platform to work with local governments and regulators to be able to bring the innovations into other markets. So I'll say that's the second challenge.
Thanks very much, Jamie. Trust and localization. Very interesting. Perhaps Leroy, do you want to weigh in on this as well? What do you think are also some of the challenges that you see, especially since you're in the thick of it in Indonesia?
Yeah, no, I think every organization obviously has their unique challenges, but it's very important from my own experience, worked in conglomerates and large organizations and now a startup, that it's always very important to work backwards from the customer and really define, what are the user requirements, what are those needs in that particular given situation. For us, being in, embedded fintech, obviously security and governance is really important. So for us, data residency was super important, making sure we're compliant with local regulations, making sure from a tech perspective that we have like redundancy, disaster recovery, because from a financial regulatory perspective, that's a requirement. So cloud technology and choosing the right technology is really important. And then secondly, definitely financial literacy. So an area that we're in is mortgages, and we're trying to access people in different regions across Indonesia. So what we've started to do is think about different ways we can approach that situation by thinking about the customer and being able to scale. So we developed a mortgage advisory tool that helps to educate them in terms of how much they can afford in terms of capacity and collectability. So we provide them a real-time scoring on how much they can afford for a particular house. And maybe if they can't afford that house, maybe they should have more savings, or maybe they can actually get a cheaper house or a more affordable house at a different location. We can help them connect there. And then from a collectability side, really trying to educate people on, what is a good interest rate, what's a collateral-based loan, what's buy now pay later, different type of interest rates. So really trying to educate customers and move them more to affordable ways of building wealth, rather than thinking more about productive-based lending, rather than thinking about consumptive-based lending. And that's really an ongoing journey, and that's something that we're looking to really thrive through Indonesia, and maybe through Southeast Asia later on as well.
Thanks, Leroy. Rashesh, good to hear your thoughts as well on this topic in terms of the challenges. You shared a little bit from digital governance, but I'm just wondering whether there are more that you are seeing across the region.
Thank you, TJ. I think the previous speakers have already sort of touched upon the key challenges, which is sort of trust and security of the digital services, and certainly that will also affect how willing people are to take up these new services. And I think happy to hear sort of the efforts that private companies are still making to actually improve digital literacy by creating sort of these kind of programs that would help sort of gain improve people's understanding of the services and also gain their trust. I think still, from what we can see in the data, I think there's a lot of these financial services are still sort of in the region are concentrated in sort of more densely populated urban locations. So whereas in the rural areas, the sort of the services are still sort of difficult to expand. And of course, this is a problem even for traditional sort of financial inclusion measures that rely on banking services, because even then it was very hard for banks to expand to rural areas and sort of serve the underserved customers. So one of the key challenge for utilizing digital services to actually truly expand financial services into these underserved areas would be to see how we can overcome some of the barriers that the traditional banks were facing, right? Because a lot of these services still rely on, let's say, traditional infrastructure of having bank branches or having physical presence in some of these rural locations. And how can we overcome the challenge of that is going to be important. Of course, I think a lot of the governments in the region understand the importance of expanding the infrastructure as widely as quickly as possible. Sort of like especially the sort of take up of mobile phones and internet has been rising, but still I think in the rural areas we still see a huge gap which needs to be filled, which would be sort of like a initial step towards improving the digital financial inclusion in the rural areas as well. And I think, so you just look at some data, for example, I was looking at some data in India on the rural-urban divide, and you can see that 52% of account holders in urban areas use digital payments compared, let's say, on 30% in rural areas. And if we actually dug deeper into the data, I would assume that among these rural area users are also those that are adjacent to the urban centers, right? So it's a lot of that challenge. And some of the sort of reasons that they highlight for not using digital services is, of course, trust and sort of shortages or unfamiliarity, but also they cite lack of uses or lack of need for these services. And I think that's one sort of important issue to highlight is perhaps one of the strategy or starting point is to see how we can start by the sort of the rural offline merchants. How can we integrate them into the digital financial system? so that there is actually a sort of a need or a demand for having the services among customers as well. So what we see observe is a lot of these take up of digital services is driven by sort of need. So people need the service, or people see the value of using the services, and therefore they take it up. So if we can sort of see how this rural offline, and of course, I think the people who have joined the e-commerce have adopted the digital services for transaction purposes, so which is already good. But maybe there's rural offline merchants who are, so how can we sort of integrate them into the digital ecosystem, which would then enable the sort of the customers to actually see the value of digital services in those areas. I think that will be a key challenge to overcome. The other one, I think, is also the differences across sort of the capacity of local workforce to actually build these native services. I think Jimmy mentioned how each region is different, or each country is different, or and then needs to have sort of a tailor-made approach. And that does require a lot of human resources in those areas. You need coders, you need software engineers, you need managers, analysts, all of those things that are local, that are quite familiar with the local market. And having a lack of those kind of skilled workforce to be actually build these native systems in the regions would also need to be overcome if we really want to sort of quickly expand the digital financial service all across the region. So, thank you.
Thank you, Rashesh. You brought up a very important few points, which I hope we will be able to dwell into later. I would like to move back to Leroy, because I understand, Leroy, that you would need to leave us shortly to catch a flight. That's the beauty of technology. He's here one moment, and then, after this, he can zoom off straight away. Before I delve deeper into, your usage of cloud and your business, maybe you could share with us, walk through with us perhaps your organization's cloud journey, and what were the considerations that you made in the process, so that for our participants here, they're interested, that want to learn more, it will be some nuggets that they can bring back with them.
Sure, thank you, TJ. Yeah, I think as I mentioned earlier, it's really important to, again, work backwards from the customer journey. Really think about, one is, who is your user, and what you're trying to solve for. But overall, there's some, I guess, high level type of areas of commonality across industries, definitely, that I've seen. And for sure, when you think about those, top of mind, one will be definitely performance. So if you need to do things like, thinking about what are the organizational channels that are there. For us, since we're, a digital native company, we didn't have those challenges that I've seen in other organizations. One of being like thinking about how to use data to drive decision making. How do you break down silos between different organizations? So performance and thinking about which cloud providers will provide you performance and give you the right data tools and reporting that allows you to make the right decisions at scale. So for us, that was something that we decided from day one. And then even thinking about using technology and workloads to drive more agility and flexibility. So being able to scale up, scale down if there are peak events. Over the weekend, we had a peak event. I'm sure Grab has that quite often. So how do you scale up and scale down and have and cost efficiency at the same time? That's definitely another. So thinking about that and what are the workloads that are required to do that, how you can monitor that performance. And obviously, like I said, security and governance is very important, especially in finance. So for us, disaster recovery was a big one. So obviously we're on AWS. The reason why specifically they have what's called multiple availability zones, so 3 different availability zones, and they have one data center or more within each availability zone. So within Indonesia, you need to have disaster recovery. So it's regulatory compliant, which is very important financial support for us. And then also thinking about availability of, so you need to enough people that actually the cloud providers actually provide enough resourcing themselves to help provide literacy and train people across, say, data scientists, data analysts, software engineers, backend engineers, front-end engineers, DevOps, security ops. So again, that's super important in thinking about enablement of technology.
Thanks so much, Leroy. Data, ability to scale, security, and governance, especially on the disaster recovery. I think all these are very important for our participants, who are trying to figure their way out through the whole digitalization journey. Something for you to think about. Staying on Leroy, let's just delve a little bit deeper. You shared a few examples just now, but maybe you could share a little bit more, the real world use cases from your company where, using of cloud-enabled technologies, how has it helped you to really drive the whole financial inclusion outcomes? Especially you were mentioning, you go into actually quite a lot of the islands as well, right? Yeah. So if you could share a little bit more with us on that.
Yeah. So I mean, one is high availability. So ensuring when we're reaching islands, the connectivity isn't in some areas cannot be great. So for us, we also took a very local approach. We work with community banks and also large financial institutions. And for us, it's very important that we can actually onboard those financial institutions and also people around them. So for Ringcast, what we've done is we actually onboarded branches in those local areas, community branches as well. And we've provided them our technology. And it's very simple for consumers. So they can very simply, if they need to understand where they are in terms of their financial footprint, they can securely scan, for example, their KTB. They can do a security check. They can understand where they are in their financial journey. Can they afford a house? And can they afford that house for, say, the next 10 years if there are impactful financial events with family along that journey? So it's really, really important that you can actually provide that access with technology to, one is the local institutions that actually give access to the people, and also at the same time being able to educate the local residents of the communities as well. So for us, being able to do that and providing that literacy is really important, but also at the same time, being able to use recommendation tools to reduce fraud is also really important, to also reduce things like ensure you're compliant in a very privacy way. What we see is a lot of people in the industries, for example, they share data over WhatsApp, for example, which may not be the most secure way of doing things. So we've provided ways of being able to securely send particular data points using a system that can be assessed and can be recommended back to the customer on how you can actually go ahead with your financial journey. So for us, it's creating those infrastructure, that localized infrastructure, those localized data pipelines and recommendations back to consumer have been very, very important on the local communities.
Thank you so much, Leroy, and we appreciate the time that you've taken to be with us. Have a safe flight. We will catch up again at the next given opportunity.
Thank you so much, and thank you for having me.
Thank you. So we've been talking about broad trends. We've been talking about challenges. I think for the remainder of the time before we go into Q&A, we want to go a little bit into more specifics, into examples. And on that, I just wanted to ask Jamie, within Grab, how has this technology really been serving some of the more vulnerable demographics? Because you did mention quite a bit about the underserved, etc. So, the more vulnerable demographics in society, such as perhaps the women in business, the women in particular, to be able to gain greater greater access to financial products and services. Yeah, would you be able to share some examples, please?
Yeah, sure. Thanks for the question, TJ. I think this is actually a topic that's really close to our hearts at Grab, because I think many of you may know that there is a sizable segment of the partners in our Grab ecosystem coming from these vulnerable groups in Southeast Asia, for example. It could be the B40 in terms of income ladder. could be women, could be persons with disabilities, as well as the very small traditional mom and pop businesses as well. So a key challenge that these groups face is actually a lack of access to credible earnings opportunities, and consequently to make ends meet on a day-to-day basis. For example, women, they have to take care of their families at home, unable to take up traditional jobs. Financial inclusion actually starts with people being able to have an income or even money to be able to make financial plans and transactions, right? And I think also relating to Rashish's point earlier on, you need to create a demand for financial inclusion and use of financial services. So I think it really starts with having some income to be able to manage that. And I think that's the first step that Grab really provides opportunities to allow people who traditionally cannot find earnings opportunities to participate in the economy in that way. We've also seen and heard firsthand how individuals and businesses actually run into severe financial difficulties and often have to resort to borrowing money at exorbitant rates from non-legitimate sources and lenders because they don't have bank accounts, and they also don't have the requisite credit rating or pay slips to obtain loans from the more traditional licensed banks. And this actually pushes them into a debt spiral, which then they find it very difficult to get out of. So the examples of how Grab seeks to address these kind of issues is, I think just sharing on a high level, there are actually more than 5 million driver partners and more than 5 million merchant and Grab kiosk agent partners registered on Grab to be able to earn an income and through the offering their services on the platform. We give them opportunities to earn this income through flexible gig opportunities as well as additional revenue streams through our digital platform. This is really the first step. And for driver and merchant partners who don't have bank accounts, their earnings are paid out into digital wallets as a start. So I think this is also relating to the point Rashi said about, when you get started and participate in the digital economy, that's when you really find a need to have to participate in these digital financial services as well. And many traditional businesses which come online for the first time when they join our platform also use GrabPay to receive payments from the consumers. So you see, there's really a lot of demand generation in being able to use these financial services because it's relevant to them. So these are steps to help them advance on their financial inclusion journey. So I think, as mentioned earlier, I think I shared some examples in the first earlier question on fractionalized finance, how we facilitated microinsurance transactions on the Grab platform also and extend credit to our partners at very competitive rates using very different and alternative credit scoring, credit worthiness assessment approaches. And I also, connecting back to, I think, Rashisha's point about, the governments, right? We're also seeing governments looking to partner with platforms like Grab to help disperse financial subsidies. This creates a use case for them, right? Because actually platforms like ours have a good reach to a wide range of user groups, including those that traditionally are not easily reached by the government. So for example, the Malaysian government was dispersing money to citizens via e-wallets to spur consumer spending during the COVID period, and also to drive cashless payment adoption via e-wallets. So they have the e-Penjana, e-Pemula kind of program. So this really drives consumers, users to say, hey, I want to use this, get this money from the government to spend. And so that really gets them started on this digital payments habit. So this means that in future governments will have the potential to send subsidies even to the smallest of villages with less logistical effort as they think about it from a digital perspective. In Indonesia, we also actually have Grab kiosk agents who leverage the platform to act as intermediaries for bill payment services as well as e-commerce purchasing services in areas where consumers don't necessarily have the right access to be able to do so digitally. So this service particularly benefits the everyday person in the rural parts of the country who basically are finding it challenging to get started on their own. So these are just some of the examples I'd like to share at Grab.
Thanks so much, Jamie. Starting, I like what you've been sharing, and really for both Rashesh, Jamie, even Leroy, who has just left us. I think it's really on the one hand, it is needed, but on the other hand, it is actually quite complicated because there are so many points that not just the public sector, but even the private sector need to take note of. You talk about trust, you talk about education, you talk about access, And very often all these are interlinked, right? You talk about the whole financial literacy, how do you instill greater digital competency? And perhaps for Rashesh, just want to hear from you. Well, how better can both the policy makers and the technology providers, the private sector, work together, to really beef up this whole ecosystem, as well as to then, through that achieve that whole greater financial inclusion. If you could share your thoughts, please.
Okay, thank you, TJ. I think, yeah, those are, that's going to be an important sort of challenge for both private sector and government to work together to sort of leverage this digitalization to actually expand financial inclusion as much as possible. And of course, the reason we want to do this is because we have shown that financially included individuals have greater sort of savings, are able to access good financial services to make good financial decisions. So from a welfare perspective, it's really crucial that we sort of try to accelerate as much as possible, of course, taking note of the safety and security, and then making sure that those are strong, built on strong foundations of those elements. And I think so of course I think one of the key sort of requirements for being able to use digital services to make good financial decisions is, of course, savvy, or how tech savvy you are, right? And of course, in that case, the young people are more tech savvy than the old generation. And especially even for my own parents, I think it's very hard for them to even, let's say, order a ride sharing using an app, right? But whereas for us, it's for me, it's second nature because I'm used to the smartphone. So I think one of the key challenge would be to see how we can build good user interfaces, especially for those that are not as, let's say, tech savvy, right? And perhaps there is, of course, different apps have their own sort of, I guess, research into designing a good user interface. But perhaps there is, because different maybe different companies have so much differences across the user interfaces that it's very hard for, let's say, a person who is sort of not fully familiar with the system to actually understand how these different services are useful for them, right? So I don't know if there's a possibility, and of course I'm coming from a more research perspective, so perhaps the industry colleagues are more able to sort of I guess see how it's possible. But maybe there's a sort of, we can build an industry standard for user interfaces so that across different apps, those that are not familiar can still sort of understand how how to use the app in a sort of a consistent way across different platforms, right? And so having some kind of like standards or like key elements that should be included in the applications to make it as user friendly as possible. Perhaps that's one sort of like first step to ensuring that people actually understand and know how to use this. And of course, the issue of how to then use that app to make good decisions, financial decisions, right? That requires you to build enough training to have good financial sense, to ensure that you're using the services in a way that improves your welfare, and not be sort of making decisions that would hurt you in the future, right? So that's okay, especially when it comes to, let's say, credit and insurance and all of those technical financial services that are not intuitive for many people. Of course, I think payments and savings, those are quite easy in terms of getting people to understand how to use them. But when it comes to sort of risk management using insurance or sort of or managing your financials through credit, I think those would be much harder. And I think having good training programs, good educational programs built through collaboration between government and financial industry, I think that is going to certainly be quite important to be able to further to ensure security and sort of minimize any issues. And because ultimately, I think even the financial industry has incentive to make sure that the products are well designed, because of course trust, like I think we mentioned earlier, trust, right? And trust comes from having a secure sort of like system that is sort of not vulnerable to security threats. So I think building a good system through partnership with government was going to be in the best interest of both. And I think and of course I think the other one is I guess coming back to the digital governance, I think digital ID systems are now quite expanding in many countries, right? And I think India is one of those examples where they have built a very good ecosystem of digital IDs, which allows, let's say, easy verification of customers for financial firms, and they can use this system. They can plug into the system to actually verify the customers, and that actually helps sort of expand the services to many people. So and they can easily comply with this know your customer rules or regulations, for example, right? So the governments are building the digital ID system, which can then be used by financial service providers in the private sector to actually expand their services to many people. So I think that sort of collaboration is certainly good, and I think having a good communication between industry and government to ensure that these kind of systems are sort of interoperable and built on solid grounds and meeting the needs of the economy. Those will be some key issues to keep in mind.
Thanks very much, Rashesh. In your sharing, you have partially also answered some of the questions that our participants have. Jamie, would you have any thoughts that you might want to weigh in on this part? Because Rashesh was talking about standardization, some form of standardization, so that it makes the whole, I think the whole journey, the inclusion journey, more palatable. I'm just wondering whether you have any thoughts before we move into the Q&A section.
Yeah, I think that's actually a good point. I think Leroy also mentioned earlier about how we have to really be user-centric and user-focused. And so I think perhaps putting on that lens would be more critical in that sense, because I think standardization is probably one of the ideas to solve that. I think what we realize is that, especially when we look at Southeast Asia, the habits are actually quite different. So I would think that maybe having a starting point of understanding which segments are still underserved, figuring out what are their special needs and habits and beliefs, that's probably a core hat to have to wear in order to be able to address them. So I give you an example of how there's a peculiarity of I think when we first moved towards ride-hailing, previously it was taxi services, and we found this insight when we were doing some of these digital clinics with the elderly in Singapore, learning how to use the app. They were saying that, because I think in the past when you book a taxi, you just sit in a cab and you tell the person, go to this area, I will tell you how to turn left, turn right, and things like that. So I think that's the habit in the older generation of how they would sort of direct the ride. And so right now, if you ask them to enter the actual destination, it becomes actually quite challenging, right? And so that's I think one of example of how understanding somebody's habits and then figuring out what needs to change. It could be through the design, or it could also be understanding this is the barrier they face in using the app, and how do we support them to be able to use that. I think that's the kind of insight we need to get to be able to create the right design to be more inclusive for people.
Thanks, Jamie. Yes, I remember those days of telling the taxi drivers, turn here, turn there. Yeah. Yeah. Thank you also to the participants for the questions that you've put in. For the remaining segment of this session, we just want to hear from you, the questions that you have, and then to hear from our panelists as well. But if you have any further questions, please feel free to just drop it into the Q&A box. Let me try to start with something which I think is a little bit simpler. Then we scale it up in terms of challenge, in terms of the questions. Miguel has this question. What do startups and SMEs in Southeast Asia need to know about leveraging cloud technology and digitalization? And then he's asking, do you think this is key to their survival today? Yeah, I will throw it open to either Jamie or Rashesh. Let me just say it one more time. So he's asking whether, for small businesses in particular, I think, what do they need to know about leveraging cloud technology? Especially if they're interested in this whole financial inclusion part of things. And yeah, would that be key to them surviving as we move forward? Jamie, yes?
Yeah, I think maybe I can start first, and then Rashesh can add on later. I would say I think given a lot of the service offerings going forward will be digital, I think that makes it something important for all these SMEs to think about. entering the digital economy and providing digital services. And when you think about providing digital services, then the question is, how do you then set up the right infrastructure? And I think cloud therefore then comes to mind. I think Leroy actually talked a little bit about this earlier, about how, with the cloud providers, their support in being able to scale up and down in terms of the usage and the traffic. And actually cloud providers are also able to then invest in providing the right security, infrastructure, and support. And I think that's probably something that's quite helpful for SMEs to be able to tap on and lean on, instead of having alternative solutions where the SME themselves have to choose to invest in getting these high standards. I think on top of that, also, if you think about regulatory requirements and changing ones, especially if you're going to go across borders, oftentimes the cloud providers are able to then have the right resources to understand changes in developments and ensure that their services actually meet these requirements. And this often will take the burden off, the SME from having to understand all these to a very detailed level and ensure that they are able to cough it up and cobble things together on their own. And so I think that's probably some starting points for SME to think about, cloud providers who are actually in the business to try and provide the safe infrastructure for you to grow your business digitally.
Thanks, Jamie. Yes, to make life easier. Rashesh.
Yeah, thank you. I think, that's quite important. And I think, as Jamie mentioned, I think, for SME especially, I don't think they need to, they don't really need to, because SMEs by definition are small and they have sort of limited capacity in terms of human resources. So they don't really need to fully understand, how to integrate the cloud or how to use the cloud, but at least they need to be aware of the services that, let's say, companies like Grab and, others are providing to small businesses, right? Because a lot of these, so there are specialized companies that provide services that SMEs could use to further enhance or expand the market, for example, or to sort of make the production more efficient so that they can lower prices and become more competitive. So there are already services. So they need to be digitally aware in the sense that they need to know what services they can use, what existing services they can use to further sort of ensure or improve the profits or, expand the markets. Of course, and I think the one part of the question was whether it's required, and I think it is. Because even if, let's say, you don't do it, others will, and the issue of digitalization is a double-edged sword in the sense that it helps you expand your own market, but also sort of others can also expand to your market as well and get your market share, right? So you need to be able to sort of to implement some form of digitalization so it's sort of because of the competitive nature and sort of it enables more competition to foster. So I think all SMEs would eventually need to be able to use digital services that are offered to be able to expand the market and improve the efficiency. So I think having digital literacy and understanding what kind of digital products are available so that can be utilized by them is important. Of course, I don't think they need to have, let's say, an in-house IT department that would then create their own analytics, for example, market analytics, right? So you don't need to have a marketing division in your SME. You can always use online services that already provide those services for SMEs. Let's say Amazon provides its own analytics to small businesses that are selling the products for them. So understanding how to use these products that are already existing out there for growing their business, I think that's what the key would be for SMEs.
Yeah, and I think I just wanted to round out, I think what Rashesh raised such a great point, which is that even if it feels intimidating going directly to the cloud yourself, there are actually a lot of platforms that are developed to support SMEs in the process. So you think about digital platforms like Grab, where SMEs can go online to participate in the digital economy in a very, very simple registration process, and all the other cloud issues are handled actually by Grab. And all these things, I think Rashesh talked about analytics as well. These are things that actually insights that platforms like Grab can offer to their merchant partners to help them gain insights on the sales. So there are also many different types of e-commerce platforms and platforms available for SMEs to plug into. And that, I think, shifts the burden of setting up the infrastructure, making things easy to use to these larger platform providers to then support the SME ecosystem.
Yes, thanks both. This brings me then, I guess, to Deanne's question, because in that whole starting journey, right, there's always this thing about how do I know that your services are safe, or that the technology that has got the necessary security. Maybe for Jamie, if you could share a little bit in terms of perhaps what type of education, what type of awareness would be necessary in such cases, especially as you go a bit more rural. There could be a certain hesitancy to say, to freely embrace technology. If either one of you could share, but Jamie first.
Yeah, sure. I think that's a good point, because trust is not built just because you tell someone, please trust me, and then
Yes.
then someone will trust you, right? And I think this needs to be done in various ways. And one way, I think we talked about earlier on, Grab kiosk agents being a sort of a person to help provide first access to do some of these bill payments, etc. I think you can think about it as in certain communities, you can perhaps build up trust with someone who is a bit more open to digital services and a bit savvier, and almost like a key opinion leader in that community, because I think it takes somebody from the community to understand what are the concerns, how best to communicate that across. And I think tapping on the right leaders and influencers in communities could be a first way to get there. I think there are also other aspects on building trust. Like, I think we saw some of these examples of how the government is trying to drive digital adoption and therefore disperse all these handouts via digital wallets, digital partners. And I think by working with the government, to some extent, it also built some level of trust, because it's not as if a player just came out of nowhere and is just asking for your money, but rather there's an additional level of credibility that's seen if the government is willing to push money through this platform. Perhaps as a citizen, I'm able to trust and try it. Anyway, the money is free, right? It's creating the first demand to let them try it, experience it, and feel comfortable with it. So that's also an additional perspective of how do you build trust, leveraging partnerships with the right entities and organizations that already have some level of trust with the users. And then finally, I think we talk a lot about creating demand and use cases. I think oftentimes if people realize that they need something that much, then they start to try and understand something a little bit better and overcome their perhaps questions and fears around it. The thing is, when there's no real use case, then it becomes very hard to convince someone to say, hey, trust me to do this. But somebody will be like, oh, but I mean, I don't really need this. Why do I need to trust you? I feel very uncertain. So once there is a real use case, then that's where you can actually find the opportunity to unpack what are the concerns around it. And I think that's where providers need to really understand the consumer perspective and needs around the use case, and then can deliver a product to help allay the fears on that. And it could be examples of, a product putting in prompts, showing indications of what kind of certification they got, or at least putting prompts to make sure that they get to give approval or must confirm, enter special password to let people know that things don't just happen. So it really depends on use case and how you help a consumer feel safe in a specific use case. So I'll say those are the three areas I wanted to share on that.
Rashesh, you want to add on?
Thank you. Yeah, I think Jamie made some important points. I think I agree with that. And I think I would also highlight, I mean, of course, Jamie touched on what the providers themselves can do, right? Of course, I think there's also a role for government here to really convince their population that they have their backs, right? I mean, of course, these systems are highly regulated, and they have like good privacy laws in place, e-commerce dispute settlement laws in place, all of those things, and I think ensuring or sort of like educating the population about the safeguards that governments have put in place to support the users in case of any issues. I think that's going to be quite important for to build trust as well. And I think the other eventually, I think trust is, I mean, of course, I've often heard, for example, a lot of people also don't trust, let's say, banking services, right? But of course that grows as the services will become more familiar. And there is more habit. I mean, it's also about habit formation. As the people use more of it, they begin to trust it as well. So I think a lot of the trust issue probably emerges because of the newness or the unfamiliarity of the product. So I think, like Jamie mentioned, having sort of a regular use cases to actually get the customers to actually rely on it and sort of see that it works well and it's more efficient. than, let's say, other like the alternatives of, like you having cash, for example. Those would certainly be key in building trust, and I think eventually it will happen over time. It just takes a little time for people to get used to new products and services.
Yeah, that's true. That's true. Talking about products and services, there have been a few questions that kind of went a little bit deeper. Just wanted to perhaps just hear your brief thoughts on it. Because when we talk about financial inclusion, I guess beyond just the immediate supply of money, right? There are also things about perhaps as a digital platform with financial services, how do you then look into things like repayment risk, the risk of credit defaulting, etc. And I guess along those lines, in the bigger picture, would really be then how can then the private and the public sector come together to address some of these issues, especially when we start to move it broader, towards even taxation. I'm not too sure. Perhaps you can weigh in your thoughts on this.
Maybe I can start, I think, talking about some of these risks as we expand financial services, right, to these marginalized groups. I would say, I think I'll focus on, I guess, two broad themes. Firstly, on accessibility, and secondly, on responsible credit.
Yeah.
I think the first thing is we need to recognize that we need to ensure that financial services are made accessible to those who need them, because the risk of not providing them with the right financial services results in them turning to alternatives that are usually far more worrying for them to get into. When we talked about earlier, the examples of very high unlicensed money lenders with high interest rates. So the question is being able to develop a product that's accessible and is compatible with what they're able to afford, right? And then secondly is on responsible credit, which is, how do you help the people providing credit and the people taking up credit understand what levels are suitable for them? Have they thought things through before taking up the credit, right? And this ties in with elements of the financial literacy education we talked about that's important. I think I give some examples of what we do at Grab that relate to these two themes. I think one thing is when we talk about lending as well, I think Leroy mentioned a little bit earlier as well about how, when we are financing goods that help them earn an income. So for example, at Grab, when somebody is trying to upgrade their smartphone so that they can, take on ride-hailing jobs or delivery partner jobs more efficiently, we know that we are happy to support that, because we know that that's almost like a financing for an asset to help them generate future cash flows. And when there is that kind of understanding, there's a lot more confidence to support the partners and providing credit in these areas. But of course, beyond that, there are of course certain occasions where people need to take credit for lump sum items because there's heavier cash outflow for something that they need in life. And I think it's through innovations like that where Grab offers the financial service to the partners, allows us to actually then tap on the data we have on our partners to know that, hey, we understand these people's earning patterns in the past based on how often they decide to log on to take up work. And because of that, this helps us be able to evaluate creditworthiness from a different lens, which usually a traditional financial institution might not be able to, because they don't have the same access to the type of data or traditional data that they rely on. At the same time as well, money lenders, perhaps unlicensed and illegal money lenders, don't have the data, and therefore they choose to extend credit up to any amount, and people will just have to worry about that. Versus in Grab's perspective, we actually have the incentive to ensure we assess the creditworthiness based on these data points to extend credit that we believe is able to be repaid in a sustainable and healthy manner. Because can you imagine, it's also it doesn't make sense for Grab to try and offer too much credit and the person can't repay, and then the person will probably stop logging onto the Grab platform to avoid that, and then it affects the business in multiple ways, where people also no longer start taking up gig jobs there and serving the broader ecosystem. So there is some level of, I think, financial incentive for the company to ensure that there's proper credit extended to the partners. And I think finally, I think you talked about the roles of broader ecosystem and the governments and how the
Yes.
different organizations can come together, right? I would say, I think the government plays an important role in knowing how to strike the balance between regulating versus giving space for innovation. I think the financial services sector is traditionally a very heavily regulated one, and rightfully so, because it's people's money and livelihoods, right? But at the same time, how to give spaces for innovative ways of, I talked about how at Grab we're using alternative credit scoring models to be able to extend credit in ways that traditionally financial institutions cannot. And it's giving this space for innovation that allows the industry to come up with creative solutions to meet needs that traditionally are unable to. So having the right balance of giving space for innovation while still keeping the environment safe for consumers, I think that's an important one that we have to partner with the regulators and governments on, because we have to help build their confidence that, hey, we're not just going in there and not caring and ignoring all the risks, but understanding how we are aware of the risks, how we then manage to mitigate them, support to ensure that nobody really gets into trouble as we innovate. Yeah.
Thanks, Jamie. Rashesh.
Yeah. Thank you. I think, yeah, I mean, those are important concerns. And of course, these are macro concerns as well. And that's sort of relevant for all forms of financial services, even those that are traditionally provided through banks, right? And I think, I mean, there has to be some level of, so I guess there's a distinction between, like a good faith assessment process, which would assess the risk associated with any sort of project or lending request, and sort of like more, let's say, predatory sort of actions, right, on the part of, let's say, some money lenders who just give money to anyone just because. But I think I think one point I'd like to make is basically that, I mean, some risk is inherent in this kind of ventures because, like, let's say if you're getting some money to start a business and the business, and there's some chance that business would fail. So we have to tolerate some level of, like risk. And because if we are too risk averse, or if we just don't take too much risk, then we are sort of putting out in the table a lot of those projects which might, be worthy on sort of in some cases, but don't get. And that's what usually happens when we have financial crisis, right? Banks become more risk averse, and therefore they don't lend out money to projects that might be worthy in a sort of like a good environment, right? So I think we have to be able to tolerate some amount of risk, and of course that goes to even the small, especially lending for small businesses and for some of these projects or consumers that are sort of they don't have, let's say, the high level of income, because, I mean, of course, because they are seeking credit, which means that they have sort of like some cash flow problems that they're trying to solve in getting some of these loans. So I think we do have to tolerate some risk, but how much risk is good and actually enhances growth, and how much risk is too burdensome that would take down the whole system. That is where the balance has to be struck. And that's where I think the regulations come in. And like Jimmy mentioned, I mean, these are some of the most heavily regulated industry. But of course, I think there's also sort of ways to structure the regulation so that we allow innovations. So, and I think there are some, so there are some parts of the financial services ecosystem that are quite heavily regulated. That's at the core. But then there are some, let's say, user-facing aspect of the business that could be allowed more innovation, right? Because they are sort of less risky in terms of the risk there does not sort of spread to the whole ecosystem as quickly. So I think having this kind of tier system and sandboxes where you could try to experiment on some aspect without affecting the whole system. I think those are some of the areas how we can sort of ensure that there's the right balance between like how much risk you want to take as a society by offering these sort of services to some businesses, while understanding that some of the sort of failures are inevitable just because of the how the economy works. But so having sort of a healthy tolerance for that would be good.
Yeah, having a healthy tolerance for risk, and I think I like also what Jamie said, that through digital platforms, that whole perspective of assessing risk can be from a different angle, and I guess that would then differ from platform to platform, technology to technology. Rashesh, you was talking a little bit about, I guess, the certain aspects of the whole financial inclusion and the financial services sector is actually more heavily regulated. in these areas, which I would presume would be things like regulatory compliance, taxation, general accounting. Do you see a trend of perhaps governments, within our region taking on this role of providing the inclusion at a lower cost? Because the question came where sometimes, these type of services, it could be quite expensive. So do you see a trend of governments taking this up? Or would you see a trend of actually more innovative startups coming into the picture to fill in this gap? Yeah, if you could comment.
Yeah, I think the latter would probably be more common. I think, I mean, these services are too complex and too sort of like, so there's no one size fit all sort of like solution to this, to the demands of its financial services, right? So it's not really an area where government could effectively provide the services. For example, it's not like a utility like electricity where everybody's demand is the same, right? Everybody is, but financial services are quite, need to be quite tailor-made to individual needs. And therefore there is, I think it's going to be quite inefficient for governments to actually provide the actual services. Of course, they need to provide the ecosystem, including, like I mentioned earlier, about, let's say, through digital identification, they could provide, let's say, the verification of the customer, for example. But the access to this data have to be given to the private sector, who can, use that through APIs to just verify that the customer is who is customer's identity, and then they can provide the services as a private sector, right? So I can see, and I think that's the example that India has adopted quite well. So they started with the Aadhaar card, which is the digital ID system, and the private financial private sort of companies, startups especially, are able to, let's say, query those databases to actually verify the customer, and then they can provide the services tailor-made to fit the customer's needs or something like that. So I think what I see is it would be, I mean, ideally it would be the case where because these services are so heterogeneous, right, in terms of the elements that are needed for each customer. So I think the private sector and startups especially who can leverage the government infrastructure to actually provide to create new services and innovative services. That would be the ideal sort of mix and partnership that would be necessary, I think.
Yeah, I want to echo Rashisha's point, because I think governments will invest in some of the infrastructure aspects like digital ID. It totally makes sense. And we're seeing that in our region as well. Like in Singapore, the SingPass, I think a lot of businesses have benefited from using it for KYC, KYB as well. I think another aspect where governments have been supporting in investing in driving the adoption is perhaps the first use case, funding the first use case in that sense, right? Where we talked about dispersing money through these systems. You can see that the government can help contribute in one way, which is to disperse the money, but they still need the partners, the private sector, to have the right wallets, to build these different wallets, to have choices for consumers to then decide how to participate in this. So it's really the government investing in some way, but definitely need the private sector to come in to offer solutions to partner with the government on that.
Thank you so much. We've had a flurry of questions that came in, and actually through your sharing, we've more or less covered quite a lot of it. As we come to a close, I guess hearing from both of you and even from Leroy earlier, when we talk about financial inclusion, I think we all agree that the government can play a part to just do a kickstart, right? To have that first catalyst to really just get the system going. And then from there, that's where the public-private partnership comes in. Yes, this partnership is tricky because it contains many elements, from a point of governance to a point of platform standardization to really just even cross-border, right, facilitation of financial transactions. And of course, you had shared through the course of this morning also the point about when we go down to the ground, when we start to engage perhaps even the more rural areas, one thought would be to try to identify the use case. What is a particular need for the particular perhaps town, village, that's area, and then to start building from that point. I liked what Jamie shared about perhaps for another area, you find a KOL, the key opinion leader, right? Yeah, the key influencer in that place, someone or some establishment that is trusted by the community that can then act as the intermediary to just begin to bring inclusion to the greater part. We've had a very, very robust conversation. I want to thank both of you, and also to thank Leroy for really just adding on to the different discussions, sharing your knowledge with all the participants. So in closing, allow me to thank everyone. I want to thank the participants, to thank also all those that have thrown in your questions to the Q&A box. This is an ongoing issue. And I think, across the different organizations that have been involved in this discussion, the ADB, ERIA, AWS, with our partners like Grab, with Leroy from Rinkus. These are all different stakeholders that are coming together to want to build that digital future, a digital future where, we want to be as inclusive as we can, knowing that there are challenges to overcome. But I think to our participants, that's where, let's not wait for government. Yeah, I always advocate, let's not wait for government to do something, but let us begin to just be proactive ourselves. Whether you are in a private sector, whether you're in an educational institution, be proactive, start the ball rolling, start the engagement process. And then together as a collective, we can move things, really towards creating a more inclusive financial situation within our region. So on behalf again of the organizers, we want to say thank you very much for your time, for being with us. So take care, have a good day ahead. Bye.
Yeah, thank you.
Thank you.